Next up, we have Anglo American, which was founded in 1917 by Sir Ernest Oppenheimer and focuses on platinum, diamonds, copper, iron ore, and coal. It also has a controlling stake in Kumba and significant iron ore assets in Brazil. It has a market cap of 191 billion rand, a price to earnings ratio of 48, and a dividend yield of 7.5%. I actually saw on the rankings tables that Old Mutual had overtaken Anglo in terms of market cap, which is a sign of the times, I guess. Two old stalwarts of the JSC, long histories, and Anglo have been dominating in terms of, the rankings for, forever, basically. Sure. But we've seen a shift, especially within the South African economy, away from the likes of mining and more into services, financial services. Anglo American, made some big mistakes with Cynthia Carroll in Brazil, huge write-downs there. Are they going to be able to turn Minas Rio around?
Yeah, I mean, the write-downs continue, don't they? I think now they've written down more than the third of what they paid for that already. That probably looks set to continue with the iron ore price, one of the worst affected commodities around at the moment. Anglo American's an interesting company. I think a lot of South Africans have a romantic attachment to it. As you said, being one of the top or the larger shares on our market for many years. Now out of the top 10, 12 or 13 mutuals taken it over. So I think there's, it is a good player, but it has problems and maybe not the quality that we've seen in some of the stocks discussed prior to it.
Let's have a look at the graph there, and we can also see on a downward trajectory. I guess there's a big debate, especially involving Anglo American amongst South African investors. Don't look at the price to earnings ratios and so on, look at the book value.
Yes.
And that's where everyone is seeing the value in the likes of Anglo American. But unfortunately, they've been seeing that value from a lot higher on that graph. They've been putting their money where their mouths are, but it hasn't worked out so far. So in terms of, looking at book value of a business like Anglo, do you think, that's a better way to interpret the business?
Yeah, it's probably strips out a lot of the noise. The problem is if your if your underlying fundamentals are still moving lower, that is going to affect your book value. As you mentioned, there will be write-downs, etc. I mean, I think what some people viewed as the jewel in the stable, De Beers, is also now coming under pressure. Inventories are higher, prices are moving lower, strong dollars affecting that. So I think what was viewed as quite a big driver of earnings is now also starting to stutter a bit. And that's, I think, to a degree precipitated this recent slide. We're back to 2009 lows. So, we're really plumbing prices, shareholders don't want to be seeing. And the question is, when does it stop? When do we bottom out? And we're not seeing that yet.
I guess the problem is, again, this double-edged sword where these companies are probably seeing good opportunities. I've heard Mark Kutafani many times on the radio saying this is the time that they should be investing, taking advantage of the lower prices. But unfortunately, because of their low share prices and probably low ratings in terms of the agents, the ratings agencies, access to capital is the big issue. Hot or not?
Not hot for me, Brian. We're going to be consistent on this theme, unfortunately. Not for me.
I will agree with you there. Not hot on Anglo American.